Welcome to another Capital Gains Tax Solutions. Hello, everybody. Welcome to another Capital Gains Tax Solutions Mastermind, where we believe most high net worth individuals and those who help them, they struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy is an amazing way for you to create and preserve more wealth by exiting highly appreciated million-dollar assets, deferring your capital gains tax, so you can create and preserve more wealth, eliminate the need for the 1031 exchange, and or help your clients, friends, and family do the same. For those who know me, my name is Brett Swartz, and I am founder of Capital Gains Tax Solutions. I'm also a multifamily broker, real estate investment advisor. We love to help people invest in real estate, create wealth, cash flow, depreciation, all things tax law and cash flow. And every single Friday, we come here and we mastermind together. We talk about the biggest objections and challenges with a strategy such as the deferred sales trust, and we talk about real deals that are happening, so that you can take action, be inspired, and learn along with us. We're celebrating our journey. We're still learning every single week new intricacies of tax deferral and exit planning and wealth building. And today's topic, to start us off, is essentially overcoming your deferred sales trust objections. Overcoming your deferred sales trust objections. And so, I asked our good friend ChatGPT. 4, by the way. Highly recommend it. It's amazing. I said, what are the top 3 objections to a deferred sales trust? So we're going to read these, and then we're going to discuss them, and just kind of give us an outline. And the deferred sales trust, as a reminder, is a strategy to defer capital gains tax that arises from a sale of a business, real estate, or other appreciated asset. It could be stock, it can be cryptocurrency, and it can be artwork, collectibles, businesses, real estate. It can save a failed 1031. But despite its benefits, there are several objections or concerns that individuals may have about this strategy. Because be frank, not a lot of people know how it works or have done it. And like anything, until you've done it or have a trusted advisor do it or a trusted friend do it, it can be a little bit nervous to be the first one, let's say, in your circle or in your sphere of influence, right? So the first thing I think is the most objection that we receive, or one of the most, is complexity and lack of understanding, right? So DSTs can be complex because it is a legal structure that are helping to execute the strategy, and that lack of the full comprehension from the seller can be a roadblock. So, for example, I remember when I first started in real estate, as a broker, at least. I started real estate at a young age, but as a broker in 2006, we started learning about the 1031 exchange when I was at Marcus and Millich up on about day 3. And that 1031 exchange process and the rules and the intricacies, I mean, that took a long time, even for me then, to fully comprehend and understand. There's a lot of if-thens. You need a third-party, unrelated, qualified intermediary. You got to make sure that the 1031 is set up prior to the close of escrow. You've got to work with your broker, have the buyer cooperate. All of these different moving parts that are part of the complexity. Well, the deferred sales trust is likewise a lot of similarities there. And the biggest thing is with the 1031 exchange, there's about 5,000 companies out there that have made it, a commodity, right? Meaning they know it. They like it, they trust it because they just see it so often. And I think that helps to, lower the emotional, nervousness that someone might have with the 1031 because they're seeing it, it's happening so often. So not all accountants, attorneys or financial advisors or even commercial real estate brokers or luxury agents, they're not familiar with the deferred sales trust, right? In fact, they get it confused with the Delaware statutory trust. And so this legal confusion, the lack of understanding, also you add that there involves numerous parties, including a trust, including a trustee, that's our role, Capital Gains Tax Solutions, an installment sales agreement or a promissory note, also an investment manager or financial advisor. And so this misunderstanding or mishandling of the trust arrangement or how it's all set up can lead to tax consequences and unexpected painful tax that you aren't planning on paying. And so that complexity is definitely a number one objection. Number two, I would say, is the trustee control, not necessarily in any order. Certain clients have different feel or different objections at different ranges here. But the trustee control and management risk, right? So in a DST, the trustee has control over the assets. However, the funds don't move without your approval as the creditor or as the lender, right? And so as the trustee, it's our role is to be responsible for managing of the trust investments by working with and hiring a financial advisor, looking at real estate investments. Essentially, this trustee who's third party unrelated to you necessarily to make this work, it's shifting the unilateral control from you as the seller to working with the trustee, and your control is as a lender, right? So it's a shift, and this shift away from you can create risk, especially if you don't know or like or trust the trustee, and or they don't have a track record, right, of performance either within real estate and working with other financial professionals. We believe we work with some of the best financial professionals, and we approach this as a team sport, right? That's part of why folks ask, like, how you're managing and working with high net worth individuals across the country. Is it you ever nervous about it? I'm like, no, I know the team I have. I'm so confident in the financial advisors we work with, like Jake Carpenter, Jake Miller, and others. And funds are held at TD Ameritrade, Charles Schwab, SCI, Raymond James for other financial advisors, AssetMark. These are some of the largest financial institutions and securities investment advisors that we work with. And so all of that team approach is what creates, I think, the confidence. And so, however, for someone who hasn't either met the team and or worked with the structure, the lack of control can be uncomfortable, right? Which for those who are accustomed to managing their own assets, right, unilaterally, at least managing the manager who manages the apartment complex, or if it was their business, if they were the one in it every single day. So there's definitely a shift emotionally from unilateral control to a team approach. The next one I would say would be the regulatory and or legal risk. And so the IRS hasn't come out with like specifically sanctioning deferred sales trust, right? There hasn't been like IRS court case law. However, there have been audits, right? And that's what we stand on. Part of our confidence, thousands and thousands of transactions closed, close to almost 30 years, and over 24 audits, all no change, no finding audits. And that's what helps to bring a degree of certainty. But for those who are counting just on IRS case law, right, and or again, their CPA or someone else, feeling great about something they've never done before, this can create a barrier. Okay, so it's important to always consult with your CPA. We invite your CPA to the conversation. Estate planning attorney, right, tax attorney if you have one. Work with us along with the creator of the structure, law firm and CPA firm who created it, right? So we have the legal track record, and not only that, but also the lifetime audit defense, which is so important. So that being said, I'm going to pause here. I'm going to say hello to some of our strategic alliances and some of our business partners. We have Jake Miller. Is Jake in the house today? Are you in a spot where you're able to say hello? And how are you doing today, Jake? Jake Carpenter. We'll go to the next Jake until the other Jake is ready to go. Jake Carpenter, how are you doing today? I did see you there. You're looking good today. Happy Friday to you. We'll go to Micah. Micah, do you know where the Jake Miller is and if he's going to be joining us today?
Well, I will definitely find out. That's for sure.
Okay, we're live on YouTube and Facebook and stuff. But Micah, how are you doing today?
Doing fantastic.
Excellent.
Doing great. Glad to be here. Glad to talk about the DST.
Absolutely. Anything about that opening, about some of those objections that you want to highlight or comment on? Any thoughts there for the audience?
Yeah. So I mean, it's definitely good that you highlighted that the investor is kind of relinquishing a little bit of their unilateral control. That's a good thing to keep in mind. And there are certain people that really doesn't fly for, but really, as soon as they understand that their unilateral control goes and is rechanneled through the trustee, it really puts them at ease.
Yep. And also, too, by the way, how we create transparent protection for the funds. Funds are held like TD Ameritrade, Charles Schwab, where Micah and Jake are financial advisors, right? And now it's never commingled in personal accounts or business accounts or other trust accounts. There's a single entity trust that Micah opens up for the accounts that we're doing with her and Jake Miller. There at TD Ameritrade Charles Schwab. So talk about just that process and being able to have transparency online with all the documentation, tax documents, performance of the investments.
Sure. Yeah. So anytime that we're doing anything, we will always open up the accounts, but we'll have the note holder being a part of it as well. Anytime that we're investing, we're doing allocation documentation so that the investment note holder is part of that decision making process. I mean, sorry, not all that eloquent today, but yeah.
No, I think that's great. And here comes the Jake Miller. Jake, how you doing, sir? Now he's live and he's on the move. Where are you today? And I don't know where you catch you up, but how's it going today?
Doing very well. Sorry, I apologize. I was with some French citizens who were raised in American medical clinics in the country of Colombia. So a little bit kind of all around, and just leaving the shopping center where they have their medical office. But to answer your question and to add a little bit to what Michael was saying, we kind of sit in as your personal CFO for a lot of financial decision making. And there's obviously a client portal, investor portal, a lot of decision-making tools where we bring analytics to the table and help you make the very best overall decision. Sometimes, depending on the client and their needs, we are the out-of-the-box thinkers that bring options to the table that perhaps they didn't know existed. And that's part of our job, to assist Brett Swartz as the trustee in the financial investment decision-making process so that within the DST, which is a tax preferential vehicle, clients are able to maximize not only their tax efficiency, but their investment rate of return based on their objectives and goals that we established based on the planning process. They're selling something, and perhaps it could be the largest transaction of their life or one of their larger transactions, and we're helping them roll the gross proceeds of that sale, minus attorney fees rather than minus taxes, into eligible investments that they perhaps weren't even eligible for before this transaction, but now that they have a deferred sales trust, the world of investment opportunities has now been opened. We bring that to the table.
Oh, well said. That's Jake Miller, everybody, certified financial planner. He also served in the military, which is fantastic. You can reach him and find him at strategictaxsolutions.com. If you want to get with me right now, take action, go to capitalgainstaxsolutions.com. So let's also ask, I think it's fair to ask ChatGPT not only what they think the biggest objections are, but also maybe what's some ways to help people overcome those objections, okay? And so this is kind of interesting, and I like the way they put this. It says, understandably, and this is in regards to the overcoming the complexity of lack of understanding objection. Understanding the complexity of the deferred sales trust can seem daunting initially, right? It's your biggest exit that you might have in your entire life, and like Jake just said, and it has implications for the future and for maybe generations that come with this wealth, right? And the way we like to put it is like the fourth quarter, there's 10 seconds to go, and you're running with this football, and you're trying to score this touchdown, but the IRS is kind of like that big linebacker that wants to stop you from hitting either scoring that touchdown, and or if you score the touchdown, they want you to kind of maybe fumble a little bit. It's not a great analogy, but perhaps it's going to be taxed, right? Is really what we're getting at. And so if you can set everything up prior to, it's not as daunting if you've had time to spend with us, right? This is part of why we're creating this content, this education. It's why we have our coaching program. It's why we have our new book with Kevin Harrington from Shark Tank in the book, and also Jake Miller and myself talking about ways to build a capital gains tax exit plan so that you have as much time and opportunity to build a know, like, and trust so that you plan your exit plan now so you can exit and not have to combine these two, daunting type of decisions, because it's really stressful when you're exiting your business, your highly appreciated house, commercial real estate, and changing and trusting a new team. Okay, so that being said, this is what ChatGPT says, and what I agree with as well. That's where expertise and years come into play. You're looking at Jake Miller with his years and years of experience, myself with of experience since I've been working in real estate since 2006. So I consider myself like a real estate advisor when it comes to investment real estate. Jake Miller would be a financial advisor, and collectively you're counting on that track record. But guess what? You probably have a lot of knowledge and expertise as well, and we want to invite you into the conversation. And not only that, but it's ultimately, if you don't approve of the investments, we're not moving the investments. So that helps to simplify the complexity, right? As well, we want to make sure your CPA is as comfortable as they can be and understands the intricacies. There's going to be small questions or big questions, but really detailed questions is a better way to put it, about how to report it on an installment sale method, right? How the income the interest income is taxed. How the capital gains, the principal portion is taxed. When the tax is paid, how it can pass to your children and your heirs, right? You want to work with your estate planning attorney and have a living trust set up, and all of those intricacies are a part of our educational materials and our support, so that you can navigate this unfamiliar territory. You're not doing it alone. You have a guide every step of the way to help you with this, right? Whether it be investments, whether it be the compliance for reporting with the IRS, your tax returns, whether it be with passing it to your kids and your heirs. We believe in empowering our clients with the knowledge and be here to answer any questions, no matter how detailed they may be. And part of how we not only say this, but we live this, in that we provide a 100% no cost, no obligation analysis, detail, and working with your CPA, estate planning attorney, working with your commercial real estate or luxury real estate agent, and answering all the questions. And for some reason you don't want to use the trust, no problem. Or your deal doesn't close for some reason, no problem. You don't owe us anything. In fact, we're no cost, no obligation due diligence. The next one has to do with overcoming the trustee control and management risk objection. So this is the one where it's natural to feel uneasy about relinquishing control of your hard-earned assets. But we're here to assure you that as the deferred sales trustee, our priority is protecting and growing your investment. The way we put it here at Capital Gains Tax Solutions is there's not one single dollar that we want to be not in a great position to grow and be invested and paid back to you at any given point. So that is our goal, is to protect and grow the investment by working with folks like Jake Miller, like Jake Carpenter, who's going to talk here in a second, like Micah, who's on Jake Miller's team. And together we can execute that with potentially, or most of the time, somewhere between an extra 25 to 50% of your gain that would have been wiped out, or your net proceeds, is all in the trust, right? All in the trust growing, right? So we have a long track record of successful trust management backed by rigorous risk management protocols as well that we follow. And most importantly, our interests align with yours. The more we can understand what you want, the outcome that you want to be, and what your wealth, not only plan but impact for the wealth, the more we can help you with that. So we don't want you to be in the dark about your investments. In fact, we give regular updates. We give full transparency on how the assets are performing. And while the deferred sales trustee has legal control, you maintain the influence on how the funds are invested, and that's so important. I'm going to pause here and bring in Jake Carpenter to see if he wants to add to or highlight any things I just said. Jake, what do you think about any of that I just said?
Brett, the deferred sales trust is one of the most vetted tax deferral strategies on the planet. And, one of the biggest issues I've run into with with some of the clients that even we've worked with, Brett, is their professionals don't always feel like they may have the horsepower, the knowledge, or the expertise to handle a transaction like this. And what they find is, and I want to tell to those of you out there that are watching this or listening to this, if you're selling a business, because this doesn't only apply to real estate like a 1031 exchange, but if you're selling a business, you're selling a stock, you're selling Bitcoin or any highly appreciated asset, and you want to defer the tax on that, the deferred sales trust has the ability to do that. But now if your advisor, who may not be comfortable handling that situation, do not stop your due diligence or not move forward with the consideration of the deferred sales trust because of that. And the reason why I'm saying that is because Brett and I have dealt with situations where their advisors really didn't understand, but we brought in our tax attorneys, our financial planners, our real estate specialty, our professional team to surround them and make sure they had the resources and the questions that they had answered to come alongside them and make sure that they did and were able to execute this transaction. While yes, it's complex, it is not new. We're using IRC code 453. This is almost a 100-year-old tax code. It's almost a 30-year strategy with thousands of closes and dozens of IRS audits. So we're not talking about snake oil here. We're talking about nothing more than an installment sale. And if your professional isn't comfortable with an installment sale, it's not hard for us to come along and make sure they have the information that they need to conduct these transactions. So that's what I would have to say.
Fantastic, Jake. I absolutely love the way you put that. And, it reminds me of, I had 2 ACL surgeries done when I played basketball in college and I blew up my ACLs. And I remember walking into the surgeon's office. Well, even back before that, I was walking into my general practitioner's office, and I had him I said, hey, I just, really hurt my knee over the weekend. I was playing basketball, came to a jump stop. It's totally swelled up, the worst pain. I heard and felt a pop. I've never experienced this before. I think it's probably my ACL. He's like, I did sports medicine as my focus, if you will, right? But he's practicing as a general practitioner, family doctor. Let me do the test. All right. He grabs my knee, Jake, and Micah and Jake Miller and everyone else listening. He grabs the knee and he does like, I don't know if you've ever seen the knee test for the ACL, where you sit on the table and he kind of just tests it. And does the first one, and he's like, kind of moving it. And he goes, no, I don't think it's your ACL. And then he ties the knee and he actually yanks it sideways, and my MCL also had torn. And I was like screaming. I was like, wow, just the worst pain because he's actually like tearing it more. He's like, okay, your MCL is definitely hurt, right? But I don't think it's your ACL. So here's what I think. Do the MCL brace thing, keep it straight for 3 weeks. Your MCL should be returned, but you should be back playing in about, 60 days or something like that. I was like, with physical therapy. I'm like, okay, that sounds pretty great. And I'm all excited because I'm thinking, okay, my trusted family practitioner, he's a sports medicine, major or focus for his thing. And he's told me my ACL's good. I can be back on the court, by fall, because this happened in the early summer. Well, fast forward, I get a call from my brother. My brother's like, you know what, Brett? I know you went to that doctor, but I had a friend that had a different outcome with the same type of thing where they thought it was still good because they didn't get the MRI. They didn't push through and ask more questions and go through. And so the next time I went to him, I said, doctor, I know you did this, test, and I know you don't think my ACL is gone, but I just have heard some horror stories. Would you please just order the MRI? He goes, you're wasting your time. He's writing up the MRI. You're going to drive all the way down there. It's really expensive. You're just wasting your time. Your ACL is fine. But sure, if you really want to do that. So he writes it up. Yeah, just thank you, doctor. I go down there. Sure enough, get the MRI. Long story short, he calls me 2 weeks later and says, your ACL is completely ruptured. It's gone. Right? And so we went from a guy who was very confident not to get an MRI. I'm back in maybe 30, 60 days. And had I done that without pushing through the initial expertise of somebody, and I think that's where a lot of folks who are listening to this for the first time, their emotional and their trust has been built up with a family practitioner who's amazing at what he always did, but he wasn't a specialist in ACL surgeries, right? In fact, the worst thing is the things you think you know, right? That's what it's most dangerous for any of us, when we think we know, and rather than saying, I'm not sure, let's go find out, right? And so that is the approach I want to encourage you to do, is to not have that CPA or attorney or real estate professional stop you from pushing through. That doesn't mean you don't invite them to the conversation. Have them come on with us, with the CPA tax attorney who created the structure in the law firm, with financial planners and Jake Miller, Jake Carpenter, and myself, to go through this and find out, right? And at the end of the day, you say no problem. But I can tell you this: 9 out of 10 folks we found will join us, and that CPA will be thanking you. That attorney will be thanking you because they start to send us referrals. And so that is something we want to too. No question's a bad question. Michael Jordan says it well. The only thing that you miss is 100% of the shots you don't take, you miss, right? So you've got to take a shot on the due diligence. You want to spend time and energy executing on the due diligence just as much as you're executing on the exit plan. All right, this leads into the last objection here: overcoming the regulatory and legal risk objection, right? And while it's true that the DST operates in a complex regulatory environment, with capital gains tax solutions, with the law firm who created it, and with the financial advisors we work with, we all have a deep understanding of not only collectively as the tax law, but also the implementation of the strategy for numerous clients close to 30 years. Okay, like Jake Carpenter said, thousands of closes, close to 30 years, as well as the tax attorneys facing audits and overcoming all of those audits with no change, no finding. And so the DST structure has been vetted as pertains to audits, right? And we also are, staying up to date on the IRS guidelines. So no strategy can entirely eliminate risk, but we strive to minimize it. Moreover, we stay abreast of any changes that are going on. But ultimately, the decision is yours, and we're here to facilitate that process with you with as much information, assurance, and support as you need. And the deferred sales trust can be a powerful tool for preserving your wealth and by deferring the capital gains taxes and then growing your wealth at optimal timing. And that is our goal, to help make this journey for you as seamless as possible and as worry-free as possible. That being said, I'm going to open it up for questions. You can put it in the chat. If you want to take action right now, you can go to capitalgainstaxsolutions.com. You can also subscribe to our YouTube channel by searching Capital Gains Tax Solutions, and you can look for the book that was just released, #1 bestseller, Building a Capital Gains Tax Exit Plan. And it's the proven playbook for unlocking your wealth plan of any kind, or selling assets of any kind for yourself and for your clients. So, who has questions? Unmute yourself, say hello to us, and me, Jake, and Mike are here to answer. Give me comments too. Does that have any questions? Give me just like something you liked. We love the encouragement as well. You can also raise your hand on the little reaction guy, and it gives a little hand up there on the Zoom. Anybody? Everybody? All at once?
Well, Brad, if you don't mind, I think there's a couple statistics from my firm that might be beneficial just so that people know and understand a little bit of how we often work with clients. And I think it goes in line with some of the things that you mentioned there, in the sense that at Strategic Tax Solutions, 80% of the DST referrals that we receive are from CPAs or accountants. And so what does that mean? If your current CPA or accountant hasn't done 100 of these themselves, they may have heard about it, they may have received a training on it somewhere, they may have known or do a referral, found that it's this thing that they do the deferred sales trust, but they themselves have never implemented it. And so then they refer their client, they're usually attending with their client meetings with people like us. And then 5% comes from M&A attorneys or business general counsel attorneys. And so we work with all professionals. In fact, Brad, you and I have been in a boardroom with over 18 board members, owners of a medical clinic, discussing the deferred sales trust. So whether large or small, whether it's your spouse or your entire team, we're more than willing to sit down and discuss the ins and outs of the deferred sales trust and how, as experts on the topic, we can work with your professionals to make sure that all your questions are answered and all the I's are dotted and all the T's are crossed. And that's kind of a common thing that we do. We have an initial discussion, then we dive into the nuts and bolts with anyone who's relevant that we bring to the table.
Absolutely. And by the way, Jake is also being, I think, a little bit modest there too. Not only that, but he was actually chosen to be out of I think it was 10,000 CPA firms, the top 400 of those. And for exit planning, they chose Jake to help guide discussions on tax strategies for people who are exiting. And what the CPAs would do is they would, every week or every month, they would show up with a new tax strategy that they would have Jake vet, research, poke holes in. And let's just say 95% of them were stuff that were let's just say out on the fringe or not proven, doesn't have a track record. And during that research, as Jake learned about the deferred sales trust, is one of the ones that actually passed all of the initial research and testing, right? And having the track record with the, I guess, evidence-based CPA, tax attorney, audits, and all of the things, and just making sense of what it is. And so hopefully that gives you some good confidence. By the way, learn more about Jake Miller. We're going to strategictaxsolutions.com. And it looks like we have a question here, and so I'm going to have Micah ask the question, and then we will dive in. Go ahead, Micah. What question do we have?
Yeah, so Melissa wanted to know, because in her situation, she has 4 different properties, trying to find out when they can be sold or what the minimum amount is as far as being able to kind of plan out the sale of these properties.
Great question. Yeah, you want to start, Micah? Why don't you start, and then I'll have Jake Carpenter fill in any gaps there.
Absolutely. So I was going to say that there are, we would want to make sure that we are understanding the base. We want to know how much debt is on the properties, if any. We want to know the selling price. And also, since there are 4 properties, we want to know how soon do you think that, obviously you don't have a crystal ball, but we would need it to be the proceeds to at least be $1 million to qualify for a DST. That could be 1 or 2 properties if they combine go to $1 million. It could be all 4 properties, but we kind of have that conversation and see, okay, when do we expect those properties to sell? So that's kind of where I would start that conversation.
That was a good start. Jake Carpenter, do you want to reiterate that or just clarify anything there?
No, that was a really great start. We want to know the basis. We want to know the total sales price. We want to know that there's $1 million or more of total sales proceeds. And we want to make sure there's at least $1 million subject to capital gains tax. And then from there, we would hopefully, what we're looking for is a sale within 1 calendar year. And then we want to start the due diligence process as soon as possible. Loop your attorney in, loop your CPA in, get the team put together, get all your questions answered just to make sure that the deferred sales trust is going to be a strategy that's going to fit your needs.
Fantastic, pretty good. I think both of those are perfect. And so and it's good to hear from multiple ways. And so I'll say it again here. So find out what your adjusted basis is. Now, your adjusted basis is what you purchased the asset for, plus improvements minus depreciation, right? So if it's a multifamily property, you bought for $1 million 27.5 years ago, and you've owned it for that amount of time, you've done straight line depreciation. It says 0 depreciation likely, right? If you took the straight line over those years, the value is now $5 million, right? And so you have a $5 million gain. Now you might, in the last couple of years, added $300,000 of improvements, and so now you might have a little bit of a basis there. So you'll want to just really clarify with your CPA based upon your tax returns what your adjusted basis is. If it's cryptocurrencies, it's basically what you bought it for, right? Or stock, because it's just what you purchased it for. That's your basis, right? There's no depreciation there. Number 1. Number 2, obviously what you could sell it for. Number 3, the debt. Really important, the debt. And here's the thing. We don't want the debt to be above the basis. That's considered ordinary income tax, and that's something that the deferred sales trust cannot defer. Although if you're doing a 1031 exchange, you can look up on my YouTube channel. In fact, I'll drop it in the chat here. That is it's basically using 2 DSTs with a client named Ron Anderson. He and his wife were selling a property in Colorado, and they had about $1 million debt over basis challenge. And so we use what's called a Delaware statutory trust to couple with the deferred sales trust. And if you're not here inside of our YouTube, our live stream right now, inside of Zoom, you can go to Capital Gains Tax's YouTube channel and just look up Ron Anderson on my channel, or look up multifamily $4.2 million using a deferred sales trust with Ron Anderson, and that'll break down how to do that and how he helped him. Okay, and then the timing aspect, right? So it's key here that we set up the deferred sales trust prior to the close of escrow, but even more so prior to the buyer removing all contingencies. Or if you're selling cryptocurrency or stock before selling that stock. Okay, so we need to have time to set everything up. Unless you're in a 1031 exchange, then we can save a failed 1031. However, realize that not every single 1031 exchange company or accommodator wants you to know about this. In fact, they want to keep you in the 1031 loop, and or they just don't know or like or understand or trust it because of whatever, right? So we just choose not to work with the groups that don't know how to do it and or don't want to work with us. That's great. We have others that do, right? They give you all the options, but for regular 1031, Delaware Statutory Trust, or Deferred Sales Trust, so you can just contact us at capitalgainstaxsolutions.com to get that set up. Okay, now that's a lot that I just said, so I'm going to ask Melissa to please unmute yourself if you can. And let's just see if we answered those questions for you and or anything that we can clear up for you. If you're still here and you're able to unmute. And maybe it's not a safe place for you to be driving. Oh, are you there? Hi, I'm Melissa. How you doing?
Yes, that was very helpful. You answered all the questions I had about that.
Excellent. And where are you calling from?
From Southern Illinois.
Okay, excellent. So that's one of the higher tax states like California and New Jersey and New York. So what other questions or thoughts do you have so far? And by the way, how long have you been, how did you find us and how long have you been kind of learning about the Deferred Sales Trust?
Today, I found you yesterday and I'm learning about it today for the first time. So I'm an optometrist and I have a private practice that I'm going to be selling in 10 years. So I've been looking for different strategies with that, but I also have other real estate holdings. And I'm not sure, would this type of a thing also apply to sale of practice or only the real estate?
100%. Optometrists, dentists, orthodontists, veterinarians, very, very common with the Deferred Sales Trust. We just helped a dentist in New Jersey exit. They had about a $2 million exit, had worked there for 25 years, and they were looking at about an $800,000 tax. Without the Deferred Sales Trust, have about 1.2 million, with it about 2, and able to live off all of the interest from that too. So, yeah, in fact, we think it works best for businesses for that matter, especially if it's a C Corp, because C Corp has some unique extra taxation on the exit. So regardless if you're an S Corp, C Corp, LLC, professional practice, tech entrepreneur, stock, cryptocurrency, real estate, we can help. If it's in a partnership or not in a partnership, we can help. There's really not any asset that we're aware of. We can do planes, we can do helicopters, we can do really anything that has a huge gain and is subject to a large capital gains tax. So any thoughts or questions on that, Melissa?
No, that's very helpful. Yeah, so this is the first time I'm actually even hearing about this, so I plan to continue learning more.
Cool. Thanks for jumping in and unmuting for a bunch of new people online. So that's pretty cool. Awesome. The next question we have is from Kevin. Hello, Kevin. It says, can you sell cryptocurrencies that are only listed on a decentralized exchange like Uniswap? Great question. So, in fact, for the cryptocurrency deals that we've closed, we've mainly used Kraken, okay? And this is before, let's say, the crypto crash here. And they were Ethereum and Bitcoin, right? So we are happy to work with you on that. Every cryptocurrency is a little unique, but if you can basically get it to Ethereum and be able to transfer it to a Kraken account, there's definitely some steps there that will walk you through. But whether it's decentralized or centralized exchanges, we just have to ultimately get to this centralized exchange through swaps, but we'd have to set up the trust prior to any of those trades or exits happening. So it's definitely going to depend, Kevin, on your unique holdings and where you're at. So feel free to unmute yourself too, Kevin. Great to say hello, and maybe we can see if that answered your questions or any thoughts on that, Kevin.
Sure, yeah. Hey, how's it going?
Hey, good. Nice to meet you. Where are you calling from?
I'm calling from California.
All right, right on. I'm originally from Michigan, San Jose, Fremont, Sacramento. What area of California?
Like around the OC area.
Okay, great. Excellent. So what questions, thoughts do you have?
Yeah, so I was just wondering, I guess you're saying you could sell it to Ethereum and then because that would be considered a sale, no?
So, right. So it depends on, so we would typically, for the decentralized, before you get it to Ethereum, we would already have sold that altcoin or the decentralized coin to the trust. Okay. And so when it swaps to Ethereum, technically it's already been sold. So the trust has already established a new basis. So let's just say you have $1 million of a decentralized coin that can be moved to Ethereum, right? Or converted to Ethereum. We would have already sold that $1 million coin to the trust, and then just to get it to cash, we got to go to Ethereum, and then to Ethereum, like in a Kraken, for example, we would go to cash. So but this all depends on your unique circumstances, and we were happy to sit down with you and go through it. Does that kind of answer your question so far, though, Kevin?
Right. So what I'm getting is, as long as you could drop in basically any cryptocurrency to the trust.
So it all depends. So get with us afterwards, and we want to go through it with you. And it's all no cost, no obligation, right? We can set up a time. You go to capitalgainstaxsolutions.com, set up a one-on-one consultation with myself or one of my team members, and then we can walk you through that in detail. So I don't want to give a blanket statement here, right? But it's because we haven't done with all of them yet, right? And there's cryptocurrencies a lot, right? But that's how I envision it with those that we've worked for the decentralized. We haven't closed a decentralized one yet, but we are actually in the process of multiple ones right now. So, but let's sit down and go through it, okay, Kevin?
Sounds good. Thank you.
And Brett, kind of a timely question. We have another mutual client that has a large holding in XRP, and they just had a settlement with AGI. And so, well worth the wait, says the client, as in the next 2 or 3 months, it'll likely be time to liquidate. He has a similar situation, and it's not probably Kevin's situation, but essentially he is able to move some of his tokens, not just XRP, but other things, from a decentralized to a Coinbase account. And then that Coinbase account can be held inside of either an LLC that's owned by the trust or the trust itself. And so a lot of those types of movements, sometimes we use the word sell, sometimes we use the word transfer, sometimes we say move, relatively based on what state you're in. That means different things when I say state of the country. But essentially, we help provide that legal advice from an entity standpoint to ensure that when you do liquidate one of these tokens or crypto coin, whatever, that you do it in such a way that could be supported by our legal team and defended in court based on the tax deferral that we're recommending, that we're creating for you. And so I just wanted to add that, kind of the same thing you said, Brett, but in other words, and a real life example that's playing out right now.
Very well said, Jake. Absolutely. And that's the key here, kind of back to the opening monologue, if you will. We're going to be here for you every step of the way. And a lot of this all depends. It's not like the boilerplate, living trust or 1031, where it's just like the same thing every time. There's definitely more complexity and more moving parts. It's part of why we get paid to do what we do. It's also part of why this isn't as well known, because it does take, I think a lot of hours. I have over 10,000 hours with this now with the tax attorney. So the neat part again is we have no cost and obligation. So yeah, Kevin, book a time with us. We're happy to go through it. We have the next question from Chris, and Chris asks, is there a playbook for CPAs, step-by-step guide? He says, I had a DST fall through with another vendor because I didn't have a full review and understanding of the steps involved, and that limited my ability to quarterback the process. Chris, that's a great question. I think the first playbook would be building a capital gains tax exit plan if there were a playbook, right? I think this is going to cover some key things. This is the book that we released here recently on Amazon, and it's going to give you some tactical knowledge on the deferred sales trust. Some of the chapters involved with the deferred sales trust are, break out of capital gains tax jail without using a 1031 exchange, overcoming false beliefs with the deferred sales trust, and then also just the step by step So this is a great book to take a look at. I also have, of course, our YouTube channel that has step-by-step breakdown. I have playlist after playlist after playlist with client deal stories, with 1031 exchanges versus the DST, deferred sales trust versus the other DST. And then we also have experttaxsecrets.com now, and that's actually our coaching program. And so if you're looking for like more hands-on practical coaching, you go to experttaxsecrets.com. You can sign up for our coaching, and this helps to give you one-on-one, guidance, coaching, step-by-step. So, but it's not just like a one-size-fits-all, as probably you're gathering here. It's really the team. And so in some place like Self Chris, where you're at, I would just encourage you to dive in with all of those opportunities, and then obviously bring the cases to us to give us an opportunity for you to for us to perform and you to absorb. Right, that's the biggest thing. I think a lot of this is caught, not taught. We can talk about these steps, but until you're in the live deal. So hopefully that'll be encouragement for you, Chris. Chris, you're happy to unmute yourself and say any questions or comments there. It'd be great to meet you over here, Chris. It's okay.
Hey, Brett.
All right.
No, this is Tyler. It says the team, but this is Tyler. I'm Chris's business partner.
Hey, Tyler. Nice to meet you. Where you calling from?
I'm in Nashville, Tennessee.
All right. Good to meet you, Tyler.
Yeah, good to meet you too. Really appreciate the explanations of everything. Just to kind of piggyback on that, as Chris had said, we had a DST that kind of fell through. Now, the circumstances around it, the client was rather difficult to work with. He changed his mind multiple times throughout the process. He came to us with a very shortened time frame. He claimed that his CPA, he had been trying to get a hold of her for quite a while. She finally reached out, and unfortunately, she said that she was stage 4 cancer and in treatment and couldn't take care of him. So it was a very emotional, very trying time. Definitely not an ideal type of case, but what really tanked everything in the deal was the fact that the vendor that we were working with, we felt did not know what to expect next. Chris, I'm the business side of everything, the entrepreneur side of growing our company. Chris has the industry knowledge, CPA, investments. He, just didn't know what to expect next, and neither did I. Every time we were asking for any kind of guidance, we had to go and ask to try and get the next step. We didn't know, what needs to be done here, who carries that out, who's responsible for communication. Oh, there was paperwork sent to our end client that he was supposed to sign. We didn't even know it was sent to him. Why did we not get notice of that? He's communicating to us because we were front line, but yet we're trying to go in between without any knowledge of what is going on. So what we're looking for really is confidence in not only just the process itself, because as you said, a lot of it is go through as you do, but knowing that there is effective communication and proactive on everybody's part, and that you as the vendor will let us know every step of the way what exactly is going on, what is the expected time frame, what is the purpose of what's going on, so we can effectively communicate with our client, because they're obviously going to look to us for first communication since they have a relationship with us.
So yeah, it sounds like you were. Go ahead, Jake.
I was just going to add not only confidence and trust in the strategy, but also confidence and trust in the team. That's what I'm hearing.
Yeah, absolutely. I think that's exactly right. Right. It sounds like you've had a poor experience, Tyler, on the implementation and the execution of the actual transaction, not just knowing what it does or what it can do, but the execution. And so part of what we've done and we've learned over the years is that if the same person who's talking to you about it is the same person doing all the transaction coordination, it can become very inefficient. Let's just say things can fall through the cracks. We've implemented. We have an entire team, actually, multiple team members who do the transaction coordination. That's all they do. We call it, basically the pre and post close transaction coordination. And the key here is we work on what's called like a Six Sigma. If you've heard of that before, continuous improvement. We use something called Smartsheet deal system, where our processing it's like on steroids, like a Google Drive folder that step by step checklist workflow that you as the advisor get access to. Of course, the client does. And all they do is simply go to all the parties involved and say, hey, this is missing, now it's time for this, now it's time for that. Here's what we're going to need for the entire process. And it lays it all out. And then guess what? All of the fully executed documents, all of the key, facts, all of the key players are all there for you. So you can at any point log in and say, hey, where are we with that? You go, oh yeah, we're right there. Right? Oh, it looks like it's waiting for this person. And so I think that's the key. Tyler, does that sound like it might be something that would have helped if you had something like that?
Yeah, it sounds like it's a simplified, streamlined, CRM of sorts to just simply follow the process workflow of it, and that's exactly what it would be. Is rather than having to reach out through a direct communication, from us on an email or a phone call or something, asking for it, to have something, a living document that is showing the flow as it goes through and is accurate and up to date.
You got it.
Understanding of it, and yeah, that's exactly what we're looking for, is just having that confidence and knowing that if we bring another one, even if it is not an ideal situation, obviously we want to try and help everybody we can. If it's impossible to do, having the parameters and the fortitude to literally say, well, okay, given what you're trying to do and everything, this is an impossibility. Can we change circumstances? Is there flexibility here to make it work? Yes or no? Just so that we're not over-promising, under-delivering, and then also when we are doing it, in this one, like I said, it wasn't an ideal situation, but it could have possibly gotten done, but communication completely broke the whole thing down, and it ended up being wasted time for everybody.
Yeah, we'd love the opportunity to compete for your business, and so contact us. I'm going to put I'll shoot you my email right now, Tyler, and let's get together next week to kind of brainstorm on ways to work together. If that sounds good to you.
Yeah, I appreciate that. Thank you.
Excellent.
Hey, Brett, I was just going to throw out. So you gave a little bit of background on the fact that I was a coach and an instructor for a large association of CPA firm owners and a few different things like that. You told a really good part of the story of how I was vetting other strategies and I found the DST. One part that you missed was the fact that I had found the deferred sales trust with 3 other trustees before I met you. And I had a similar experience to Tyler, where we had some clients and things just didn't go through because the trustees, which I guess the moral of the story is not all trustees are created equal. The trustees that I was using were terrible to communicate with. And they would, tell me to talk to the secretary and just things that were really annoying. Communication was the biggest breakdown. And essentially the clients didn't go with the strategy because it was too difficult to implement. And so just as a little teeny tiny testimonial and the reason why I show up every Friday to assist Brett Sports with these calls is simply because he is a very dynamic trustee. He's an individual who actually responds. You will have his cell phone number, be able to text him, as well as he has a team of individuals that help with the implementation. And he's not just a one-man band. So just saying that out loud, that's the reason why we've partnered with Brett Swartz for all things deferred sales trust, because we can trust in him that our clients be well taken care of throughout the entire process, not just implementation, not just setup, but ongoing service and maintenance throughout the life of the trust.
Jay, thank you so much for your kind words. That means the world to me. I appreciate that. We're wrapping it up here. We're down to the wire. So I want to encourage you guys and gals who are listening or watching this to take action now. Take action with the inspiration and education that we've provided this today, and join us. We want to invite you to come into the community, get to know us even more. There's some live events I want to invite you to. One of them is in South Florida, Fort Lauderdale. In about 2 weeks, I'll be speaking. It's called Capital Titans, and essentially it's 20 people who've helped raise $100 million, and so I'll be speaking on stage there, which is pretty cool, with a lot of successful, wealthy, and smart people who help other people. So you can come there if you're in South Florida. I'd love to have you there. It's a one-day event. And then number 2, you can go and check out in November. It's a Family Wealth Legacy event coming up, where I'll be speaking on a breakout session with DLP Capital, one of our #1 strategic alliances. That's in November in Ponte Vedra Beach, where there's probably 150, 250 people with not only themselves but also their families, teaching how to pass in a great way generational wealth. And so people like John Maxwell speak at these events. People like the guy who wrote the Halftime book, and of course Don, the founder of DLP Capital. People like Chet Holmes' daughter Amanda Holmes spoke at the last one. So if you're interested at all and hanging out with us, that is in November. That being said, if you want to get in contact with me, go to capitalgainstaxsolutions.com. We can schedule a time. Jake Miller, if people want to get in touch with you, where can they find you?
They can go to strategictaxsolutions.com, strategictaxsolutions.com, as well as we have an 800-773-1848, as well as alphamarktax.com as well.
Excellent. And Jake Carpenter, if people want to find and connect with you, where can they find you?
He had to jump off a little early.
Oh, I still see him
But
there,
he-
but maybe he's frozen there. Jake Carpenter, are you still there? Or maybe it's just
I'm gonna have to jump off here, but best thing to do is to give me a call at 509-396-5292 or email us at jake@carpenter.capital. Thanks,
Perfect.
everyone.
Awesome. Thanks, Jake. Thanks, Micah. And Micah's with Jake Miller, by the way, his significant other, as well as extraordinaire in all things to run the business there. So check. You can find her there. Thank you so much, everybody, and we will talk to you again next week. And